Turning our attention now to the ASX, here's Matt Birney and Bulls and Bears with the latest public company views and interviews.
Welcome to Bulls and Bears, brought to you today by ASX 300 project developer Neometals, ASX code NMT. I'm Matt Birney and I'm joined now by the Managing Director of Neometals, Chris Reid. Hi Chris.
G'day Matt.
Well, after starting and selling a successful lithium mine, Neometals is now probably the leader in the battery metals technology space with lithium battery recycling projects, a lithium chemical project and a vanadium waste recovery play. Notably, the company has 13 patents and another 56 pending with respect to its proprietary battery metals technologies. More recently, however, the company scrubbed up its massive Barrambie titanium project in WA with an updated pre-feasibility study that contains a lovely set of numbers. Okay, Chris, your titanium project in WA is starting to look very interesting. Tell me, what's titanium typically used for and what does the market look like?
Look, it's a fantastic market. You've got demand growing at about 3%. Its applications predominantly paint, paper, pigment, plastics. An increasing amount is going into titanium metal, which is what we're focused on.
So tell me about Barrambie. What's the resource there now and how does it compare to your peers, would you say?
Yeah, the resource is about 280 million tonnes down to a vertical depth of 70 metres over 11 kilometres. So it's a massive deposit. It's the world's second highest grade hard rock deposit. Fantastic potential for strike extensions and depth extensions.
Who will you sell the product to? Anybody putting the hand up for it?
Absolutely. So, recently we signed an offtake term sheet with Jushing Titanium, who's the largest titanium slag producer in China, and they supply the largest titanium metal producer in China.
So this isn't your first rodeo. You initiated the Mount Marion lithium mine in WA that was very successful. What does your plan look like to get this thing into production?
Mate, we will follow the same recipe. So, a low-cost phase development. Initially, we'll look at DSO, or direct shipping ore, followed by then producing our concentrates, exporting them to China. We can always downstream in the future. So we're looking to execute that with contract miners, contract crushing and screening, contract haulage, really to minimise the amount of capital that we put in.
What's the project mine life and what's the average annual expected free cash before tax?
Yeah, look, the mine life at the moment is 13 years. That will grow with more drilling. And in terms of the average annual cash flow, for the first 5 years of that offtake agreement, we average more than 100 million Australian dollars per annum free cash.
And what will it cost you to build? What's the IRR? And what's the net present value projected for the project in today's money?
Yeah, so look, in terms of the metrics, it's a 45% IRR on a capital cost of 215 million. We can do that in two stages, about 80 for the direct shipping and about 140 for the concentrate, and the pre-tax NPV using a 10% discount rate is 375 million.
Chris Reid from Neometals, thanks for joining me on Bulls and Bears. And remember, we're only here to give you information, not advice, which you should of course seek independently. I'm Matt Birney, and this is Bulls and Bears.
For more public company interviews, go to the Money page on the 6PR, 2GB, 3AW and 4BC websites and click the Public Companies tab.